Hello, everybody, and welcome to Real Impact Tracker's webinar, Leaders in Responsible and Impact Investing. On the call, we're featuring Lauren Compare from Boston Common Asset Management and Chris Meyer from Praxis Mutual Funds. We're happy to welcome both into the Real Impact Tracker certified community. I am Patrick Reed, a co-founder of Real Impact Tracker. If you're viewing this webinar on a computer, some logistics, we will not be using the chat or raise hand features today, but we will be using the Q&A feature, which you can use by clicking the button at the top of your screen. We'll be answering questions as we go along, and we will ask any particularly relevant questions to the panelists at the end of their sections. You can follow along at realimpacttracker.com. That's www.realimpacttracker.com, which has a host of information about the methodology, the certified community, and anything else that you may be wondering that we may mention briefly on the slides or in this presentation. After the webinar, we will post this recording on our site as well, and you can find past webinars that we've done there also. A quick disclaimer before we begin. Real Impact Tracker is not an investment advisor. We do not offer financial advice, and all information provided here is for information purposes only. For investment advice, we recommend strongly that you seek a duly licensed professional. And now, I'd like to pass it on to Gabe Brissman, another co-founder of Real Impact Tracker.
Thanks so much, Patrick, and really excited to welcome everyone to the Real Impact Tracker webinar today. Real Impact Tracker started with a goal to address what we believe is a fundamental challenge in the industry. We want to get at what really matters in impact evaluation. We care about what actually creates impact in impact investing. And we use an academic basis for that impact. So we conducted an academic literature review in creating Real Impact Tracker to determine all the pathways to impact that fund managers have in changing companies and changing society. Our goal is to build the field and encourage more people to effectively answer the question of how they can create the most positive social and environmental impact. We do this through three main ways. First, we provide ratings of mutual funds and ETFs. So our data-driven approach from the methodology scores the impact of these funds on our three main categories of impact, and these funds are available publicly on our website at realimpacttracker.com. Next, we cover certification of institutions. That's Boston Common and Praxis are two members of our certified community who have gone through a really rigorous certification process that included verification of all their impact activities and a deep understanding of their impact strategy and methodology. Finally, we provide gap analyses for analyzing the strategy, culture, and philosophy of an institution. And that's focused around identifying best pathways to improve internal processes. So our methodology is really based around academic impact. And that covers shareholder advocacy, ESG investing, and public sphere. Our methodology gives a 30% weight to shareholder advocacy, 30% to public sphere activities, and 40% to ESG investing. Now, ESG investing is not simply looking at the holdings of a fund manager, as a lot of impact analyses do look at the holdings of a fund manager. We're looking much more at the ESG intentionality and strategy. It doesn't matter if you're a fund manager that is owning companies that are creating impact, if you're not encouraging them to continue their sustainability strategies. If you're a short-term investor, invested in good companies, that can actually have a detrimental impact. We're also looking at promotion of the field of ESG investing, as scale is really important to be able to get companies to identify and understand the need for ESG. Additional academic research and promotion of ESG investing, as well as signaling of the positive financial performance that can come from ESG strategies, is really important. On the shareholder advocacy side, we are looking at shareholder resolutions filed, but also far more factors that lead to successful engagements and actual company improvements. So this is looking at private company engagement across geographies. We're looking at collaboration and persistence of engagement, leadership of engagement, and how much fund managers are actually able to get companies to improve. Proxy voting is also a really, really important way for fund managers to put their money where their mouth is. Praxis and Boston Common are both leaders in the ESG investing and shareholder advocacy space, working on really interesting integration of ESG, as well as shareholder advocacy strategies that are not flavor of the month. They really go deep into building trustful relationships with the company that can lead to improvements. They are also leading the way on public sphere advocacy and policy work. So both signing on to public policy statements and working with policymakers, but also it's very important, again, to raise awareness about the field of ESG and impact investing in general. And they're getting the word out there within their own communities and the general public. The certified community really stands out among their peers of the top global asset managers and SRI-specific fund managers. The ones that are in the community now, including Boston Common and Praxis, are early adopters that have really committed to growing the field of impact measurement. And we're very excited to have two excellent managers that have gone through a rigorous process here today. Lauren from Boston Common and Chris from Praxis. And again, I want to thank them for joining and thank you for attending the webinar. And now I'd love to pass it off to Chris.
All right. Thanks a lot, Gabe. I'm Chris Meyer, Manager of Advocacy and Research at Praxis Mutual Funds. Happy to join everyone today and share about the impact we strive to achieve. Praxis is a values-based investor rooted in the Christian faith that was founded nearly 25 years ago. Our fund family consists of 5 funds, 4 of which are equity and 1 bond fund. For the equity funds, Praxis applies both values-based and ESG screens to an index to minimize risk and cost, and then utilizes an optimization process to align our fund's performance as closely as possible to the index itself. Our actively managed Praxis Impact Bond Fund also implements our values and ESG screens. Additionally, it prioritizes the inclusion of positive impact bonds, which are fixed income investments that carry a direct social or environmental benefit. These are market rate investments that can comprise a third or more of this fund at any given time. Next slide, please. The investment process we use at Praxis is called stewardship investing, and it's composed of 5 key parts. I mentioned earlier, we use a values plus ESG approach to screening. And we believe that through this approach, we're able to reflect our values and also integrate forward-focused ESG factors into our investment process. We partner with respected social research firms like MSCI and Sustainalytics to develop customized environmental, social, and governance investment guidelines and to help manage our values-based screens. Positive investing is particularly reflected in our bond fund, as I had mentioned in the previous slide, where over 30% of the portfolio is investing in high social or environmental impact bonds. And that percentage is continuing to increase over time. We separate the bonds into two categories, climate and community. And the climate side of these impact bonds would include green bonds and renewable energy. So we would invest and help fund many solar field arrays and wind farms. And on the community side, things like affordable housing and immunizations. You see a picture of a child getting immunized there. Those are some of the things that these kind of the community bonds go towards. Shareholder advocacy is another key part of stewardship investing, and I will talk about that a little more in depth later on. Regarding proxy voting, we use a detailed values-driven proxy voting policy to inform our voting. For instance, we vote in favor of nearly all ESG shareholder proposals. We believe attentive and thoughtful proxy voting is a critical component of our shareholder engagement approach. We're also active in community development investing. We devote approximately 1% of each of our mutual funds to high social impact community investments. And these investments provide support to disadvantaged communities and individuals around the world. And we work with Calvert Impact Capital to invest this money in projects that support things like community economic development, environmental sustainability, disaster recovery, and access to healthcare. Next slide, please. I'll talk a little bit about our shareholder advocacy here, and our focus issues for the past year or so are listed here. We come up with a new list of priority issues every 2 years in our engagement plan, and many of these issues span multiple engagement plans. For instance, we've been working on climate change for over 10 years, and other issues come and go based on what we're able to accomplish in that field. And we currently have two major themes: environmental sustainability and modern slavery. And the subcategories are climate change. We work with oil and gas companies as well as utilities. That's our main focus with our climate change. Where toxic chemicals, we're working with a lot of retailers, both like companies like CVS, Target, Walmart, et cetera, to try and remove potentially carcinogenic chemicals from consumer care products. And under modern slavery, we are active on ethical labor recruitment practices. That's a major worldwide issue where there are so many people working who cross borders and are taken advantage of. We're trying to drive positive change in that sphere. And cocoa in West Africa is an issue that we've led on for a number of years. There's prevalence of forced child labor there. I'll talk a little bit more about as we move into some of the impact we've been able to generate through our advocacy. So next slide, please. So about 70% of the world's cocoa comes from West Africa, particularly the Ivory Coast and Ghana. And there are unfortunately high numbers of forced child laborers in these regions. And this is an issue that really came up for us about 10 years ago, maybe a little longer. And we decided it was an important issue to address because chocolate is something that most of us enjoy, and we don't want it to be tainted. We also hold chocolate companies, and while chocolate companies don't actually own the farms in West Africa where the worst abuses are taking place, they are the most powerful organization or company in the cocoa supply chain. and therefore have the best ability to drive positive change. So we led dialogues for over 5 years with Hershey and Mondelez International, which was formerly Kraft Foods, and that's two of the 5 largest companies in the chocolate companies in the world, on what they would commit to try and kind of phase out this the worst forms of child labor. We were able to gain significant commitments over the years of building trust with these companies that, we're long-term investors. We want to see them succeed. We also believe they could do more to address this forced labor crisis on cocoa farms. And we were able to gain some significant commitments. Hershey committed to sourcing 100% of its cocoa beans from certified sources by 2020. They are over 90% of the way there at this moment in time, and on track to get that certification. And Mondelez is doing something similar with its own Cocoa Life program. And both of these programs rely on kind of certified beans, which they could be fair trade or Rainforest Alliance certified. Both those standards have very similar attributes, and there's a couple other certifiers that are similar as well. It means that the farmers agree to audits, routine and random, for environmental and social characteristics to make sure that being upheld to the highest standard. In return, the farmers get a premium for their crop. So it helps lift many farmers out of poverty and increases school attendance, et cetera. It's been a very positive set of engagements for us, and we're very happy to be able to drive this kind of change. Child labor has not been eradicated, but we believe that things are moving in the right direction on the ground. Next slide, please. I'd mentioned that some of our shareholder advocacy engagement is on climate change, and utilities are a very important component of that. We've led and been partners in and continuing to be partners in a number of engagements with utilities. We've filed many resolutions with companies asking them to report on what they're doing to meet a 2-degree scenario as outlined by the Paris Agreement. And we've paid particular attention, since Praxis is based in Goshen, Indiana, to Midwestern United States utilities that are, coal heavy. They burn a lot of coal. So we see this as a great opportunity for meaningful change, engagement with these utilities. One company in particular that we've led shareholder engagement with for several years is NiSource, and we're actually most interested in the electric part of NiSource's business. It controls the Northern Indiana Public Service Company, which supplies about 500,000 customers in Northern Indiana. Again, Praxis is both a customer and a shareholder in NiSource, so it's an interesting mix there. But they're coal-heavy, coal-centric. They have been for many years, but they've made some recent steps to transition away. And what is particularly heartening about the change that's happening with NiSource is that they're moving away from coal. They just announced a couple months ago a plan to phase out coal entirely within 10 years, which is pretty big for a utility that is currently slightly over 50% of its electricity is generated through coal combustion. And they're actually skipping the natural gas stage. So most companies, utilities, as they look to decarbonize, go to natural gas fired plants as kind of a transitory stage before potentially moving to more renewables. NiSource is looking to skip natural gas entirely and move to a portfolio of mostly renewables within 10 years. This is very important. It's going to decrease NIPSCO's carbon emissions from 2010 levels about 90% by 2028. And it's actually in line with a 1.5 degree scenario, warming scenario. So we're very happy to see that and be part of that change. Their CEO compensation is also now tied to greenhouse gas emissions reductions. And as their integrated resource plan which is kind of what the blueprint utilities use to kind of assess demand and plan on how they're going to meet demand and what fuel sources they're going to use to meet electric demand for the next, say, 20 years. If they follow through on what they have committed to this past summer, it will effectively double the renewable energy in Indiana within 10 years. So this is the kind of change that we believe is what shareholder advocacy, how we can make the most difference through shareholder advocacy. We know over the past several years, there's been a lot of momentum behind movements such as fossil fuel divestment, and we do believe we exclude the worst performers in each sector, including environmentally in the fossil fuel industries. But we also believe that engaging these companies, for instance, with NiSource and NIPSCO, rather than avoiding them, is the best avenue to drive real change. If we just washed our hands of any coal-burning utility, our voice would not be in the room. We would not be able to influence any change. And so we're thankful for an organization like Real Impact Tracker that goes beyond holdings-based ratings to look at multiple drivers of change. And that's what we seek to do at Praxis. You can move on to the next slide, please. And this is just our disclosure slide. And with that, I'll hand it back to Gabe. Thank you.
Hey, thanks so much, Chris, for that. And before I introduce Lauren, who's going to talk about some really great stuff, I just want to highlight two things with Praxis. The first is Real Impact Tracker determined that novel engagements and novel angles are really important for creating more company change. And Praxis's engagement work with electric utilities in particular, using their local basis, the fact that they're both a customer and an investor, was really key, as he attested, to helping to create more impact and have a better point of leverage. And that's something that Lauren in Boston Common also does a really good job of, leading novel angles, and she'll actually be talking about banks and climate change, in addition to utilities and climate change, to bring in a new perspective and a new way of approaching an issue. I also wanted to highlight that Praxis has done a lot of really great work educating the public in ways that we're working towards as well on the importance of advocacy. And they've worked with financial advisors as well as individuals and others to help them understand that just what you invest in is good, but the strategy and advocacy components are really important to impact. So with that, I will turn it over to Lauren, who's got a really great presentation ahead.
Great, thanks, Gabe. Can you hear me? You able to hear me?
Yes.
Okay, great. Thanks very much, and I'm really excited to be joined by Chris at Praxis. We've known and partnered with them for many years, and definitely view them as leaders as well in this space. So Boston Common Asset Management has been around since 2003, but as a group, a core group, some of us have worked for multiple decades now together. I won't say how long, but in terms of who we are a global manager with about 2.7 billion in assets under management. We are very much integrated in terms of our approach. In fact, we have an integrated investment team that have both in-house ESG research analysts as well as investment analysts. I would say one of the things that really drive our focus is diversity at Boston Common. Not only are we a woman-led and employee-owned firm, and so many of our employees are at the table and really feel ownership and accountability for what we're producing, how we're producing, and how we're communicating our approach in terms of financial management and integration. We also have diversity of perspective, and I would say that that's actually really one of our assets. Our team come from all parts of the world, including India and China, the Netherlands, Uganda, and I think that perspective as well enriches our approach. We're parts of other communities. We're really excited to join the Real Impact Tracker community. But actually, since 2016, we've also been part of the Certified B Corporation community, looking at companies and how we can use sort of what we do every day as a force for good. Next slide. This is just to highlight the fact that we have all different kinds of sustainable strategies, and we do start with positive integration and looking at positive attributes of companies. Next slide, because I'll describe that more in detail. You know, our investment thesis is really much integrated with our ESG thesis. We have a long-term perspective. We want to focus on both companies that are maximizing opportunities and also minimizing risk in this space. We really look holistically at well-governed companies and those that are really innovative in their approaches. And in fact, we invest primarily in what we consider global peers across the globe, and really are looking for those companies that have innovative solutions to a lot of society's challenges. And I'll highlight some of the Sustainable Development Goal themes on the next slide. I think we also have a very robust, long history of active ownership and that also promotes long-term thinking. And we're really trying to, in some ways, improve the ESG momentum of a company that ultimately will then be reflected in the company financials. We have a comprehensive set of ESG guidelines, again, that really promote SEEK or positive criteria across a range of issues from sustainable energy use, mitigating climate change, really focusing on water stewardship issues, as well as the S and the G. I think one of the things we really, not only in our investment and in our ESG research process, but also in our engagement, really want to focus on companies that are ethical, transparent, inclusive, and are really accountable. And we can highlight some of those themes in some of the engagement work we do. Next slide. So this is a slide I'm going to spend 30 seconds on. We've been analyzing and quantifying the portfolio exposure to sustainable benefit categories for more than a decade, and now with the onset of a lot of focus on the Sustainable Development Goals and the role of the private sector, including finance and investment, we have reorganized this slide. But if you look, we've calculated both the exposure, which is really some portion of revenues, that invest and have either product or process in terms of recycling or health or renewable energy, microfinance. You can look at the list. But we've also, for a long time, also quantified those solutions. And of course, you don't have, we're active managers, and so there's a portion of our assets that are primarily invested in solutions companies. But what we want to quantify is that because of our rigor in looking at sustainability themes and really seeking leaders in their specific space or sector, we really have a high level of exposure to these sustainable development goal themes, and feel that this is a characteristic of our ability to seek out really positive leaders across these themes. Let's go to the next slide. So we, just as Praxis, have our cycle's 3 years. We set engagement priorities on a 3-year cycle, and then focus maybe on 2 or 3 really fundamental kind of core flagship engagements in each of those in ES and G over the 3-year period. And in fact, I call this the barn. This used to be just 3 pillars. We've actually added 2 pillars on in this past year. We're looking for holistically across the sector. Primarily, we engage portfolio companies, but then there are some times when we actually engage an entire industry, and I'll talk about the bank's work in a minute. Our engagement theme, which fits quite nicely with our ESG and investment theme, is really looking for the promotion of the transition to a low carbon future on the S side or social side. Really fundamentally looking at how companies can respect human rights and promote gender and income equality. And then on the governance side, which I've already talked about, we're really looking for companies and also engaging on issues to advocate ethical, transparent, inclusive, and accountable corporate culture. And a big engagement theme over the entire firm's history has really been on, in the US in particular, looking at lobbying disclosure and looking at corporate lobbying practices. And more recently, we've actually added on an engagement through a partnership on tax transparency globally. SDGs also is an engagement theme for us, and I'll touch on that on the next slide. And then it's also important for us, it's really important, well, you want to look at the long-term themes that are impacting both opportunity and risk in the portfolio. We also need to make sure that we're addressing the issues of the day. And in particular here in the US, gun violence, private prison labor, and mass incarceration and immigration issues are at the forefront. And sometimes it's very difficult to look for opportunities to engage individual companies, but actually in the case of gun violence, we've engaged with others, looking at how banks are financing and supporting the firearms and gun manufacturer industry, and how they can have a role to play in mitigating the impact of that sector. And we've joined with others to look at things like private prisons and, again, finance. And then in the case of immigration, we've worked with groups like ICCR. Let's go to the next slide. So this is again a slide to really demonstrate our focus on the Sustainable Development Goals. Actually, even before the Sustainable Development Goals were finalized, we were already engaging companies on how they were looking at aligning with the SDGs, whether individually or through partnership. And one of the things we've been very cognizant of and have encouraged companies not to do is we do not want to see an SDG checklist. We don't want to see a company just creating an index or a matrix to say we're addressing every single one of these. In fact, we've gone out of our way to say what are the 2 or 3 key SDGs that really align with your core business model, and could you articulate not only how that weaves into your maybe other your sustainable priorities already, or the framework under which you address sustainability performance. How are you doing that individually, and how are you doing that in partnership? Because in many ways, the SDGs, corporates and investors are only one part of the ecosystem trying to achieve the Sustainable Development Goals. And we've done this in a whole variety of ways. I've already talked about the international collaboration aspect of this, individual company engagement. We ourselves are trying to align firm level ESG and impact reporting with the SDG framework. And in our second impact report, which was issued earlier this year, we've created some slides around SDG reach and SDG engagement impact. And then I think it's also really important, and I think Gabe highlighted the idea of collaboration and engagement in the public sphere. And in that way, we're part of indices like the Access to Nutrition Index and supportive of the Access to Medicine Index. We're also allies of the World Benchmarking Alliance, which focuses on creating new metrics to accelerate corporate performance and practice around achieving the SDGs. Next slide. These are just to highlight, some of the ways in which our engagement activities in the impact report. Last year, we undertook 250 engagements, actually 277 total, and across the world. I think we also look at other ways in which to demonstrate through external certification our impact work. And for the 4th year in a row, we achieved an A+ for the PRI on governance and strategy. And then in terms of, again, collaborative engagement, I want to highlight that frequently while we do a lot of collaborative engagement, half of those, whether it's individual engagement or collaborative, were led or co-led by Boston Common. We like to take a leadership role. We are very active in the collaborative engagements that we either develop ourselves or in collaboration with other partners. Next slide. I'm going to come back to this slide, but I want to say two things around the U.S. shareholder resolution process. We think it is very important for not only U.S. investors, but global investors to stand up and protect the right to file shareholder proposals here in the U.S. We think that through the year history of filing proposals, I think I faxed my first proposal in 1993 on board diversity with Albertsons. I did that with Gita, the head of our firm, and we think that this is a very fundamental shareholder right that should be protected in the U.S. And you can achieve impact. Filing resolutions and negotiating and having conversations with companies is a form of impact. And we've brought up some really interesting issues in the past couple of years, from lobbying disclosure to U.S. drug price transparency to core governance issues like separation of chair and CEO. Okay, this is next slide, please. So this was a slide to highlight sort of engagement impacting in 2017, and as Gabe alluded to, one of the things that we try to focus on are where there are metric gaps or performance gaps. And starting in 2014, we felt really lonely in the space because we decided that our climate change focus was actually going to be engaging the banking sector. We had long discussions with banks and individual dialogues on adopting sector-specific policies, like on mountaintop removal with PNC Bank going back a number of years, or JP Morgan and others adopting the carbon principles around financing of coal-fired power plants. We thought it was time to step it up and really come out with a set of guidance around the kind of metrics we wanted to see the banking sector report out on. So starting in 2014, we issued a thought piece, which we then turned into a engagement platform for engaging the banking system globally. So because we're global investors, we're investing in, banks from India, Japan, US, Europe, and we use this collaborative platform to bring together a group of investors to partner with. And I think, again, on the collaborative front, we were asking questions that the banks weren't used to being asked. And there were both metrics on risk management, questions like, have you conducted a stress test or a scenario analysis, to climate strategy, which included board level oversights and links to compensation, to the opportunity set, and I think it's really important to look at both sides. Not only do you want to focus on, okay, are they decarbonizing their lending portfolios, but then are they strategic about the opportunity set, and are they really analyzing where there are new financing opportunities given the disruption in the markets and in this space. So over the course of we've issued 3 reports actually, and the last report we issued in February of this year looked at alignment with the Task Force for Climate Financial Related Disclosures, TCFD. It's a mouthful. But this really, what we wanted to do was send a signal that we're looking at these recommendations and whether or not these companies are using that guidance to inform internal management systems and setting strategy and goals around this. But not only do we issue the report, we then bring the findings, and the report includes not only assessment at the industry level of all of these banks, but it also includes best practice examples. And we actually think that this is a really good, innovative approach where you bring in best practice models, and you highlight them in the different areas, and then you're able to bring them into dialogues. And I think that's actually brought us the most traction in the banking on a low carbon future initiative. And just to highlight, because I think I'm going to end on this, and maybe I can highlight one other one. The other thing we think is really important is that you work collaboratively with partners in those markets. And so we've worked in the UK with Share Action over the last 12 months. We have worked with Ethos in Switzerland, engaging the Swiss banks. We had an Italian partner in one of our earlier engagements. We worked quite collaboratively over the last couple of years with Share in Canada, who have taken on the active engagement part and helped with the research. And then interestingly, we've worked over the last 3 reports with a investor in Australia. And so that, again, that diversity of perspective and experience and on the ground and in the market has really enriched our understanding globally of this issue. And then there's some individual engagement highlights as well. I will say that that all of these engagement examples are based on multi-years of engagement with a number of these companies and really stem from our approach around sustained dialogue, which really are illustrated by some of the aspects I just talked about: collaboration, developing new metrics, being public about what we're doing. So I think a lot of our impact has been around the level of transparency we have. Of course, we have private dialogues with companies, and we're respectful of those. But we're not. Our kind of engagement is really not around tea and biscuits. And if another group hadn't taken the term forceful stewardship, I would say we are a forceful steward in the management of our assets for our clients. I think I'll stop there. There's a lot more I could have highlighted, but I think we're at 20 of it. I know you want to ask some questions.
Thanks so much, Lauren. And it was a real pleasure going through the process of certification with you as well. And I actually wanted to ask a question about that I know you both wanted to talk about what motivated you to join the Real Impact Certified community. So why don't we start with you, Lauren, and then we can go back to Chris.
Sure. I think as Praxis and others in our field, we do feel it's important to differentiate. Just as Chris said, we wanted to highlight our authenticity, our intentionality around generating impact from a whole variety of perspectives. And we think and we feel that our clients, our investors, and frankly the investment community are really it is a bit short-sighted to just look at an as-of-date exposure to some of the sustainability themes and a lot of the portfolio level analysis. While it's important and it informs, it's really only one aspect of impacts that we as investors can use in terms of leveraging the assets we manage and the assets that we own.
Yeah, and this is Chris. I think I would just reiterate a lot of what Lauren had said about Praxis' motivation to join Real Impact Tracker. I think just digging beyond holdings-based research, I think is very important to get a more full picture of what a fund is actually doing to drive change. And I think from an advisor or a client's perspective, many times I think they want more information about how we're driving change, and to answer the question, what drives real change? And it's a question like measuring shareholder advocacy, the effectiveness of it, et cetera, has been a question that a number of people have tried to answer in recent years because it's somewhat hard to quantify. It's often more of an art than a science. And I think being able, Real Impact Tracker has developed some tools that attempt to answer that question. I think they do it in a way that a more comprehensive way than we've seen any other organization try and measure investing impact. So we're glad to be a part of that, and are happy to join the certified community.
I would Could I just add to that, Gabe? I think we are rightly so, we are such a data-driven industry, right? But in many ways, understanding where there are gaps and weaknesses in the data and in the analysis, when it comes to portfolio level or holdings level impact analysis is really important. And in many ways, some of the work that Praxis and ourselves are doing are actually trying to make that data disclosure from companies and that data assessment more relevant and more impactful. And in fact, some of our standard engagements are around lifting out and getting more transparency around corporate practices. Because right now, there are even some SDGs that there's no data available to analyze that. And with with AI and algorithms and some of these really fancy kind of portfolio level impact groups out there, this is going to be an ongoing challenge to our industry. And I think it behooves us to maybe take a step back and really look at what is the data really saying. And then how can we use that data to inform either our investment approach or our ability to engage and improve that data availability.
Lauren, thanks for bringing up that focus on data. That's actually something that we've found to be one of our most important impacts in the conversations that we've had. Is we've talked to a number of fund managers that have realized that there's a lot more information that people that care about impact want to hear, and they have started to think about ways to be able to disclose that in better ways. And we've seen disclosure increase around impact activities. There's still a long way to go, but you're right that in order to have really good analysis by asset owners of what fund managers they want to choose, there needs to be a lot more data around that. I also want to highlight that we're taking audience questions. We've already gotten a couple both during this presentation and beforehand in the registration process. So I wanted to ask one that came in your experience. So it's very difficult in many ways to quantify and measure the exact impact of interactions, but in your experience, what have you found to be the most effective tactic to create impact, especially corporate change? Lauren, I'll start with you.
Okay, all right, great. There's so many different. I actually think in many cases it's a multi-pronged strategy, right? It is lifting up, the public benchmarks and the metrics and standard setting bodies, right, to make sure that what is being pushed and disclosed around performance metrics are relevant. I also think in our most impactful cases, frankly, have been where we've looked at how to empower change agents or catalysts within the organization. So really looking at alignment of purpose and coming to a moment of kind of clarity that actually we're on the same side. And then bringing in best practices and peer comparisons, I think have actually been some of our most our most helpful tactics. And the multi-year engagement we've had with a number of banks, including PNC Financial, I've really seen. I think that our sort of adopt a company level engagement with that bank was very impactful, and we've actually seen corporate culture change as a result of that.
Mm-hmm.
To address climate.
This is Chris. Mm-hmm. I think that building trusting relationships with other companies or companies that we own shares in has been key to many of the successes we've experienced through shareholder advocacy. We want them to know that we are concerned investors, socially conscious investors, and we want to reflect our core values through our investments. At the same time, we are long-term investors with this company, and we're not just going to jump ship at the drop of a hat. And we want to see them succeed, but we also have these concerns. I think kind of building that relationship, often taking the time to do that builds trust, and it lends itself towards more policy change. And I think if once they companies might often be a little skittish at the beginning when we approach them, whether we file a resolution or we approach them for an initial dialogue, because they might see us as activists with pitchforks at the gate, and say that's not really what we are. We're in this together. We want to see this company succeed. We want to see our company be financially successful, but at the same time, we can show you a business case. We want to make a business case that starts with our values, but we make sure it does have that business reasons why you should change your policies or perform better here, et cetera. And that has really over time that kind of relationship building usually has borne fruit.
Yeah, I would agree with Chris that really the relationship building, but also asking the difficult questions is important, because I think in many ways challenging the status quo or challenging what the company perceives as whether they think that they're already doing a good job or ahead of their peers. I think being informed and being steeped in the peer kind of relative performance on an issue, whether it's human rights or climate change, I think looking at it as a cross-educational opportunity, right? I think is also is really important.
Thanks so much, Lauren. And we actually got a question for a Real Impact Tracker, but I want to, before answering that, let you both have any final words and anything else that you might want to say before I will answer that other question and wrap things up.
Sure, this is Chris. I'd just say thank you for allowing us to participate in this webinar, and to all the attendees, thanks for your attendance. And it was great to be able to share a bit about Praxis, and we're excited about what and happy to be here with our colleague Lauren from Boston Compare. I'm from Boston Comment, and we are excited the direction that Real Impact Tracker is taking. We think it offers a lot to the SRI world, just the financial world in general, and really has the power to drive the effectiveness of what our investments can do.
Great. I'm so excited that I had the chance to be here on the phone with Chris, who I've known for many years. I think we really want to build this community of intentional, authentic players. And I think, having more investment managers come to the table, join us, share in the learnings, and share experiences so that we can really elevate, our practice and our performance in the impact space, I think is really critical.
Hey, thanks so much to you both. And now I want to conclude actually with this question that was asked from the audience. That's a great transition into the final word. So the question was on how to look at private engagements that investment managers have with companies, in addition to just the public engagement through the shareholder resolution process. So our methodology actually looks at a whole bunch of different factors around the private engagement process. So we're looking at investment managers that report the number of meetings that they have, as well as the persistence of the meetings, who they're meeting with, whether they're collaborating in those meetings, whether they're leading those collaborations, and what actual result there is if that's something that's reported. We get this data from impact reports and oftentimes UNPRI transparency reports. And I wanted to bring that up also because Real Impact Tracker is actually now in the process of open sourcing our methodology. And we would be looking forward to the input from all of you on this webinar. We'll be releasing our methodology after going through a standards review process in early of 2019. And it's something that we think is really important for building the field, because Real Impact Tracker hopes to actually get at a real impact. And we think the best way to do that is hear from everyone's experience in addition to the academic literature, and be able to create a methodology that can be trusted, that people understand. So definitely look out for that. We're very excited. My final calls to action are for asset owners. It's really important to use ESG ratings as a starting point, but it's crucial, as both Praxis and Boston Common mentioned, to look past that. Ask your fund manager, ask your financial advisor what more they're doing from the strategy, advocacy sides to create real impact. And as Lauren and Praxis mentioned as well, for fund managers, we really urge you to join the certified community. The Boston Common and Praxis and the rest of the community are early adopters of the philosophy. They really want to build the field that's been stuck on analyses that don't look holistically at all the impacts that managers create. So please help us grow awareness that to achieve tangible impact and substantial social and environmental change, investors need intentional ESG investing strategies with in-depth and collaborative shareholder engagement and increasing interaction with the general public and policymakers. So with that, I really want to thank you, Lauren and Chris, for participating, and thank you everyone that was able to attend. Look out for the recording soon.